morning, everyone, and welcome to the Morning Edge. I'm filling in with Pipsar. Right now, as far as what's immediately moving is the bond markets. We discussed in the chat room. We got a sell signal in the bond markets about 2 hours ago, and we're trading. I think at that point was 164.22. I think we're now at 164.09. So I got a sell signal on my 30-minute exponential moving averages. We do have crude back above $50. The key area has been that 50.74, which was the key area before the run up with the Hurricane Matthew inspired rally. We've reclaimed that 49.74, and we're punching back up above $50 at the time. As I said, we got bonds on our lows, 64.08, with the sell signal generated 2 hours ago. Or actually over 2 hours ago on my EMA system. We do have the euro a little bit weaker. I was speaking to some people in the chat room on Friday about the euro, and they were thinking it was going to go higher. My thought was it's going to go lower. We're just seeing the continued MO of the euro, which is on Friday, is they have a tendency to squeeze. And I thought, and I discussed this with some guys on an earlier chat, the market had sat there for a long time in the Friday session in a very tight range between 1166 and 1175. And anyone that had been short, because we'd seen continued sell-off in the bond market, continued sell-off in the gold market, looked like the NFP might come in stronger. Those people were short and still short, and they're just going to go and have to, the market was going to put their feet to the fire like Euro always does. And they put their feet to the fire, and we sat there for the longest time, and then we started punching up higher in the spot that is beyond 1177, up towards 1193. Actually, we eclipsed 112 towards the very end of the session. But my whole token I was telling the guys is they're just squeezing the people. That's what they're doing. That's what Euro does. Since then, we've seen Euro come off from those highs, 35 pips. We're actually on our lows. One of the things that's going to hurt it a little bit is going to be the bond market. Although the Euro wasn't impacted that greatly in the bond market, on the fall that we had from the prior week, which was essentially from 170 at that time all the way down to 165, which is now almost all the way down to 164. And euro really didn't start to fall until we saw the gold market continue to go on and drip even lower, and then the bonds add a little bit. So I think that the bonds, being at its lows, are going to work a little bit against the euro. Also, seeing here, the Deutsche Bank is still talking to the BOJ, not BOJ, but the DOJ, Department of Justice. But I don't expect anything to be resolved anytime soon. That's been the thought also. So I wouldn't, expect anything resolved maybe for 48 hours at the absolute earliest, probably. So that's going to continue to weigh a little bit on euro. I thought euro had some very nice support around the 1150 area but like I said, you saw the weight of the gold market continue to, late last week, weigh on the euro, and then obviously the continued fall in the bond market. And also thought there was no news on Deutsche Bank. That pushed us beyond that level. So my take is I think we'll just go back to that level, which is what I was explaining to the guys earlier this morning. I think we'll just go back to 1150, which was good support. So we'll probably make it, which is a whole lot lower. I think we can move another 20 pips lower. I think ultimately a good area, we look at the 15-minute chart, is around 1136 in the euro. We haven't seen a lot of news over the weekend. Gold has come off its lows. We have some good support. I was showing some guys in the chat, and that was on Friday at 12:45 and 12:39. I thought we might get a good scare on Friday that could drop us into the 1230s. My whole thought was, I was mentioning to the guys, is that there's people that are long gold, at that time. I thought it could be long from 50, 75, maybe even $100 lower. And those people just were not going to get out till Friday. So there was no impetus for gold to go and rebound. And actually, if anything, an impetus to go on push lower. And essentially that's what we got with the gold market. It did pop back up, and we're at a difficult area here in the gold, actually on a very, very short-term basis. I was sharing the chart with some guys in the chat room. It looks like a little bit of a head and shoulders pattern here on the gold on a 15-minute chart. We'll take a look at that. Crude oil continues to push higher, and we've seen cable kind of move up and down here. We're going to take a look to see what news. There isn't a whole lot of news. Obviously, the big news was the debate. But we'll go and take a look. And cover this. Generally, what we do is I like to go and cover the news, a couple of news stories to kind of get the general tone or theme for the day's trading, if there is one. And then from there, we move on to the charts. We'll cover the majors, and then we'll also cover any cross rates that people want to look at. As I mentioned, generally I don't cover cross rates in the European crossover because it's only an hour long, but we'll be covering all the cross rates. I'll try and take a go at the bias chart as far as listing it. Blake sent me a copy, so I'll see what I can do on that. Never used it. So we'll take a look here on the pound as well as the peso. Britain's pound inched lower on Monday as the dollar took back some of Friday's losses against a range of currencies, while the peso surged after damaging publication of video of Trump making vulgar remarks about women. The BOE trade-weighted index, which did not price during the sterling's 10% off session crash in Asian time on Friday, hit the low since 2009 and worries about the impact of Britain's exit from the European Union weighed. I guess that's what we have to prepare for further weakness, says Hans Redeker, head of G10 currency strategy at Morgan Stanley. The course is now certainly going to be lower levels, and 120 should certainly be taken into consideration after recovering from a soft U.S. jobs number that weakened the dollar in U.S. time on Friday. Sterling traded 3/10 lower than the previous close at 23.90. That combined with the flash crash lows of respectively 14.91 and 94.03 pence per euro. The Mexican peso has suffered since May due to Trump's promise to clamp down immigration and rethink trade relations, surged as markets trim the chances of a victory for the Republican nominee in next month's election. Mexican currency rose about 2% to 18.91 to the U.S. dollar at one point in early Asian trade, its highest level in nearly a month, and held on the bulk of its gains after the second presidential debate between Trump and Clinton. The peso is unlikely to break above the trading region since June, even if more position squaring takes place, said Wu Mintz, FX trader of global payments for financial services at International FC Stone in Singapore. A full unwinding of the Trump trades should only bring us to the levels between 18 and 19 consolidation zone. Let's see. Our base case remains a Fed rate hike in December, followed by another 2 more hikes next year, said Hang Kun Hao, senior FX strategist for Credit Suisse. The slight tightness of U.S. monetary policy is accompanied by potential fiscal stimulus. It could set the stage for the dollar to strengthen next year, he added. And we'll take a look here on the Aussie dollar. Aussie and Kiwi dollars off lows in light trade. U.S. elections eyed. Australian and New Zealand dollars had a firm tone on Monday as investors awaited the outcome of U.S. presidential debate. Obviously, this was before the debate. They, basically over there in they essentially kick off the trading day in New Zealand. All eyes on the U.S. election with presidential betting markets putting the probability of the Clinton win at more than 80%. If Donald Trump outperforms, there'd be a greater chance of Trump winning the elections, and the U.S. dollar would rise against most major currencies, says Elias Haddad, senior currency strategist at Commonwealth Bank of Australia. So let's go and take a look at what we have as far as economic reports today. So we did have the Eurozone Centex index, and right now we're seeing the euro on its lows. As I explained to the gentleman on Friday, look, this is the way that euro trades. You just have to understand certain things about euro. Things are, one of the things I like about euro, it's a very, very liquid currency. It's been tough to trade over the last 4 or 5 weeks. Very liquid currency, a lot of back and forth action. You have to allow for overshoots. I was discussing with some guys in the chat room and said, hey, look, you can't, it's not one of those type of markets that you just go all in. You kind of have to layer in, even if you're short-term trading it, because it always has a tendency to overshoot. And that's generally what it will do, and even more so on a Friday. And I picked an area to go and short it, and then as the market continued to move higher, I picked another area to go in and short it. Again, I covered out of that ad already, and just continue to hold the other one, which is in the black right now. And I think potentially the euro can make it without too much trouble to 11.36. Overall, we may still make a run to, we did get to 11.05, 11.15 area, but I think there's still potential this week that we get down to 10.88 in the euro. But we'll go in and look over, I'm just saying that as we make a little bit of new lows here in the euro. So we're looking here at the economic reports that are coming in for today, and there's nothing here on the U.S. side. There's like a third tier report, the employment trends. That's at 10 a.m. Eastern, but there's really nothing out there. Now, we do have Australian business confidence, which will be after the U.S. markets close, well after the U.S. markets close. But that's it, essentially, for today. As we come into Tuesday, we'll have German zoo numbers, Canadian housing starts. This used to be a big report about 15 years ago, maybe longer. It used to be called the Johnson Red Book. I don't even know if they even call it the Johnson Red Book anymore. And we have Australian consumer sentiment, Japanese machine orders. So not really a whole lot. And definitely nothing really today to speak of. So we're going to move into the charts. And we're just going to go and follow the same format that Blake uses to balance things out. Everybody's used to it. Sometimes what I do is I would just take one break an hour, an extended break, but then that threw a lot of people off. So I'm just going to stick with what Blake does and take a break every time towards the bottom of the half hour, then again at the top of the half hour, then again at the bottom of the half hour. Shorter break, but people are more used to that, and I think it makes it easier for them. As I said, Blake's out for the week on vacation, so I'm just going to go and be filling in for him. So we're going to move into the charts now. And here we have with the euro dollar. And we've come into this area here. We made the run, yes, like on Friday here. And I'm going to go on and give you a little bit better, closer look here on the 15-minute chart to give you a better idea of where we're at. And you can see that we continue to go on and punch into new lows. And you can see here on Friday, As the market was struggling here in this 1177 area, and all I did was towards the end of the session, not the very end of the session, but we started, which is what Euro likes to do, is just basically put people's feet to the fire, whoever they have going the wrong way. You can see obviously the market was going in one direction pretty much the whole way. We had some very good support here around the 1150 area, but once again, with the gold market making lows for the day, the bond market at the time really on its back foot, that continued to go away on the euro. And the thought that we'd probably get a better NFP. I myself thought we'd get a little bit better NFP. I thought it'd probably be around, I didn't have a good take on it, told people that, but I thought 193, we might even see an outlier or something like 209 or something like that. But it came in weaker. That allowed the euro to go in and pop back up here, I guess to about 1205-ish or so. And then we pulled right back and we came into the 30-minute EMA, the slower EMA, but essentially we were testing this support here. And then the market essentially went dead in the water right in here. And we were trading in a very tight range, basically a 10-pip range. And we just stayed quiet. Then towards the end of the day, not the very, very end of the day, but we started punching a little bit higher. And then basically we just started squeezing people because anybody that was short, they had their stops 10 pips higher, 15 pips higher, 20 pips higher. And basically these people just ended up getting stopped out only to find that had they hung on, they'd have been okay. But that's what I'm saying is that's just the MO of the euro on Fridays. Now you can see here that we flipped into a sell mode. I was discussing that with the guys in the chat room earlier in the European session, very much early, about 4 hours earlier, I guess it was, at this point, or 3.5 hours earlier. And that we had gone into a sell signal. And you can see right here, we had dipped in here, we came back up here, but we were already in a sell signal. The price got above, but you can see that once we clipped into the sell signal right here, we never were able to go and cross above it. Price did, but not the faster moving average. So we remained in that sell signal. And you can see here that we've continued to go and press lower. My thoughts are that we probably shouldn't have too much trouble, I don't believe. We'll probably get a little bit of a bump around here in the lower 50s, but I think before, we shouldn't have too much trouble probably getting down here towards the 1136 area here. This is this zone here, and I'll give you a better look at it. This big old zone here, right there, 988 to 1136. We had talked about this earlier in the week that they could make it down here between 1115 and 05. We talked, I think it was like on Monday or Tuesday. We eventually did make it, and Euro's been a tough market to trade because we've been in this tight, zone or tight range for a while, and it's made it a difficult market to go in and trade. But we were able to make it down here, and my thoughts are, we'll take a look at it on the 2-hour chart, is that we'll eventually make it down here, make it down to 1088. But I think before you see a little bit of a support or the market giving a little bit of a pushback, I think it's going to get us down here to 1136. Now, the reason I have so many different levels is because I'm a short-term trader. Like I said, I'm different from Blake. I mean, Blake sometimes will go in and day trade and take very short-term positions. But for me, I find that these markets move from range to range on a very short-term basis. They just move to a brand new level. As I mentioned, I talked about this earlier last week, this 1115, 1105, and I thought that's ultimately where the market would go to, which is where it went to, but that was like on Monday or Tuesday when I was talking about that. So what I look for is, once again, people ask me, why do you color them in? I look at different zones where the market is going to go and move to. Once it gets in a zone, we'll stay in that zone and move into different levels on that zone. It's not as clean here on the euro because the euro has been traded in such a tight range. And we can go and jump back in here into the 2-hour chart to get a better look on how has been in that very tight range for over 2 months. You can see that this goes all the way back into August, the early part of August. There's been a couple overshoots, but for the most part, we've stayed in this range. It's made it very difficult to trade. It's been a tough market to trade. But you can see here, we're pushing here, and I think that I don't think the first area of support is going to be this 1150 area here. But I think that before it's all said and done, I think you'll see them punch beyond that and get us down to about the 1136 area before you see some kind of a pushback. But one of the things that you can look at, and that was my whole take when I was speaking to those gentlemen on Friday afternoon, late in the trading session, you can see it never took out the retracement high here from the release of the NFP, the actual print. So we did going in, and as we came up here, we started to punch higher, and we started tripping stops, stopping people out. That was my take. I told people that, once again, I want to sound like a broken record, but that's what the euro does. And one of the things is why you have to go in and come in and be selective with the size that you do come in on the euro, because it will go in and overshoot, and it makes it difficult. Like I said, if you do go in and come in immediately with a pretty sizable position, or you gun your whole order at full 100%, why so many people end up getting tripped out on the euro? I think the euro is a great market to go in and trade. I mentioned for the liquidity and the volatility, but you can see here with the market, it's been very quiet. I mean, in the sense that this whole move down here really made it tough. It was just drip, 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 drip. Generally, with the one thing I liked about the euro in the past is you get this very nice two-way action. But as I said, very nice two-way action. You can see with great overshoots on both sides. But we've been trading in this very tight range for 2 months. And now we're just going back towards the bottom part of this range. Once again, like I said, I think we can make it down to 1136 without too much trouble. Still remains in the sell mode on the 30-minute chart. We'll go in and take a look right now on the cable, which obviously was a big mover in light of the crash, a flash crash, however you want to refer it to. And at this point, I've just been looking at the cable on a 15-minute chart. That's it. Because the ranges, I'm saying to look at it beyond that, you're not going to be able to get a good scope of what this market is, how this market is trading. And for right now, to me, the resistance here appears to be, at least to me, the key level is right here at 2460. And actually, it's not even 2456 right here. And, we had a dip earlier to 2367, so the market's going back and forth. Someone was asking me what was my take on, how best to go in and trade it. Frankly, I'm just, talking for my own self. I wouldn't be trading it. I would consider taking shorts against it if we made a run back up here, and we can point out this level here. I doubt we'll see that, but I'm saying this is probably, I would think, with the market, as good as it gets. You can see the support here, support, and cap the market up here where the market couldn't get above it. Right there, 2634. But like I said, I think we are going lower, like the gentleman said. I think we are going to make a run eventually. And for those that are trading it that way, My guess is we'll make a run right here to this level here. And generally, like I said, I won't put my support and resistance against lows or highs. I try and go with the most touches, but this is going to be significant here, as will this. I think that the market will make it down here. It's not a market that I'm going to want to trade because the volatility is just, if you get on the wrong side, you're going to have to rush out the door. But this is 22.26. We'll mark that off. So on the upside, I'd have to go in and go with 24.57 and just a moment. And to me, the support's going to be right here. And I'm going to go with the most touches in here. It's going to be 23.25. It's already time for a break. We're going to mark this off here so we can keep track of that throughout the week. And to support just right before that. But I think that's going to be the key rate, and that's just 23.48. This is what I see right here as far as the cable. Now on the upside, I think it's just rather limited. And as I mentioned before, I think the resistance is going to be, which isn't that far away, 24.57. Now my approach is from a very short-term oriented look. You know, I'm saying is that Blake looks at things from a little bit longer-term perspective. Mine is very much more short-term oriented, so this is what I'm going to be looking at. I think that if we can go in and get a half-hour close above 24.57, then we'll start punching even higher. So I'm not worried about up in here. My focus is more towards 24.57 on a short-term basis. We'll mark that off, and then we'll go and take our break. So we're going to take our break right now. We're going to basically follow the same format that Blake follows, so that everybody is people like getting a long break or not trying to figure out what's going on. So we're going to switch over to the news. We'll take a quick break and we'll be back shortly.